Ooh, when I tell you I am giddy and excited to show you what I found, I don't know why I'm excited about this, but I'm excited about it, but probably for the wrong reasons, right? Because here's the thing. I think you have been lied to when it comes to buying new construction real estate or just buying a home in general. It was like, oh, you should wait, you should wait, you should wait. And I think if we're honest, I think it's a flat out lie. So today I want to show you, I've got a couple different things I want to show you, like an interest rate impact, a real story with some of my clients, what happens when there's more competition, the actual inventory we have sitting on the ground. And one of the best things, the thing that I'm actually most excited about, is I want to show you a look back in a really, really creative way for one particular neighborhood and show you what pricing has done just in one neighborhood. And then we'll extrapolate that out across the board. And again, when I found this, first of all, I'm a nerd for things like this. So I love that I found this tool, and it might not be a good thing. So we're going to get there. But if we haven't met before, my name is Zach. My team and I, we specialize in new construction real estate here in DFW. Whether you are building or you are buying from a builder's inventory, it's one of the things that we love to do. And if we can help, as always, contact information, we put it right here. But I think a lot of people feel like they have been lied to when it comes to new construction, and it comes to homes in general, right? So many people are like, just wait, the market's going to crash. The market's going to crash. It's not. Like, I don't have ESP, good Lord. I don't have any of that. I can just tell you, I don't think it's going to crash. But here's what I can tell you. First thing, I believe builder incentives right now are at their peak. I think we're seeing some of the highest incentives that we have seen, and we've seen it kind of ebb and flow a little bit over the last 2 years. It's been very steady, and I don't know when this is going to dissipate. I don't know when this is going to change, but realistically for all of 2024 and now for sure in 2025, we're seeing very similar incentives across the board from a lot of different builders. And here's what I'll tell you I'm seeing. A lot of builders are advertising 10, 15, 20, $30,000 in closing costs on inventory stuff that they can close quickly. Seeing a lot of that. I'm seeing a lot of, hey, forward commitment interest rate buy downs. And if you're curious about that, we've got tons of videos that can walk you through what that actually means and how that actually plays out for you. So they're buying these forward commitments to get rates down, because we're seeing, let's just look. I always like to look when I do these videos, check my handy dandy calculator. When I shot this video, we were at a 7.05% average on interest rates. And let's be honest, nobody wants to pay 7%. So we're seeing incentive money being thrown around. We're seeing forward commitments to where, hey, they're buying permanent, 5.49, 5.75 rates. I've seen builders over the last year say, hey, we're doing a 3-2-1 buy down, to where they're buying you down to like 2.99 the first year, 3.99, 4. And then fixing it at 5.75. All of this stuff, this has been fairly consistent, honestly, for about the last 18 months, at least here in the DFW market. It changes ever so slightly, but for the most part, this is the consistent that we've been seeing as builders have priced out and put homes on the market and put build jobs. The one thing that we are seeing a little bit more builders come back to is they're adding in those long-term commitments on build jobs. So previously we were seeing, hey, you could get the rate if we knew what it was going to be right now and you were closing in the next 30 to 60 days, we could buy you in a rate, no problem. But if you were building, you would have to take like a lump sum. Hey, we're giving $15,000, $20,000, $25,000 in closing costs. And they would say that. Now we're seeing some builders in this market come out and say, hey, if we are confident we can finish the home in 180 days, we're giving money toward a forward commitment on that. And then I'm kind of like, hey, that might be a good deal. But I still think right now, one of the best places to be is looking at a builder's inventory. So like if you're in a space where you're asking me, Zach, should we build? Should we buy off the inventory? I would say ultimately whatever makes the most sense for you. But in terms of like money and dollars, I think the best deals are in the quick movement inventories that they need to get off of their plate, or that they've been holding for a while, that they know is coming to completion. That's where I think they're putting a lot of money. Not to say that they're not putting it on build jobs, they are. It's just getting structured a little bit different ways. So they're like watching these things like crazy, and they're doing this, let's be honest, the reason they're doing this is because they want to sell homes. Like, this is not, like, at its core, they're trying to make money. They understand that they can cut into their margins and spend the money to make money. So that's kind of why they're doing what they're doing. How long it's going to continue, I don't know. But what I do know is if competition picks up. So right now there's not a lot of competition in the market. There's still people moving here every single day in DFW, and we're still transacting real estate, but numbers of sales are down. And so until that competition picks back up, builders are doing whatever they can to get people in the door. Once the competition goes up, incentives are going to fall down. It just makes sense, right? If they can say, hey, we can sell this home for the same amount and we don't have to incentivize it as much, like they're going to take that deal all day long, right? So those incentives kind of tend to disappear when the market shifts. And if you're following along and you're like, hey, what's going on? Is it going? Honestly, I don't know. All the signs seem to indicate that rates as a whole are going to drop at some point this year. We kind of thought that a little bit last year and it never really happened. So it's just one of those things like, would you rather wait on a rate to come down and then potentially pricing go up? Or would you rather use money that's already available and know that you can get to where you need to be on the rate? I like the second option better personally, because like I said, like it can happen. We're getting there and it's working in our favor versus waiting it out to see what's actually coming. And here's the really crazy thing. The whole thing that started this idea on this video for me is I got a text from a builder sales rep, and I can't tell you who, and I can't tell you the builder. He or she sent me a picture of some signage that got dropped off at their model. And I'm just gonna read you what it says, because this to me indicates that some of these builders think there is about to be a massive uptick in frenzy of buyers coming into, depending on when you're watching this video, coming into the spring of 2025, pushing into summer. They're thinking there's going to be a lot of influx. And if there's a lot of influx, there's more competition. More competition, that means less incentive. So this is why I'm telling you, you've been lied to if you think you're gonna wait. So this picture that they sent me, said, hey, the text said this showed up at our model this week. It's going on our doors and going in front of several of our homes. It says, given current market conditions, we are open by appointment only in order to maintain a superior customer experience. It says immediate appointments may be available. Please call or ring the doorbell. So they're like locking their model potentially. This feels very much like COVID all over again, but without it being like COVID. So I don't know what to think about that. I kind of have some theories on that. You know, maybe this one particular neighborhood, they're just trying to close out one particular neighborhood. I don't know if they're doing that all across the board. I got it from one salesperson, and it just got me thinking to the point of like, oh, we need to move because I think builders are anticipating a frenzy coming, and if the frenzy comes like they think it will, then it could be a crazy thing for us. So we're seeing incentives peak right now. And I don't know, I think we're going to have another potentially 3 to 6 months, depending on what the market does, of these peak high-end incentives where we're getting washer, dryer, fridge, closing costs, blinds, interest rate. Like I think we're coming onto that peak, and I don't know how long we're going to stay here, but it's going to fall out at some point, and we're going to not be getting what we're getting because there's going to be higher competition in the market. So if you still think like waiting saves you money, then we need to look at the conversation of mortgage rates, right? Like we've talked about this before on my channel, and I will pull up the calculator here in a minute and show you how moving price versus moving interest rate, like what that does to your payment and how that all jumps around and makes more sense, right? So like waiting costs you that money. So there's that cost of just the flat cost of, you know, the interest rate and the home, but there's also the like looking at the cost from the standpoint of what is the dollar actually worth. And with the way inflation ebbs and flows and the way things move, like waiting may cost you even more than that. And so it's like, well, of course, what do we do with this? Like, how does this make sense? It's like, well, I don't know. I'm just telling you, I can show you the numbers, I can show you the data, because I think so many times we make decisions based on emotion, and I don't want you making an emotional decision. I want you making a logical decision with the data. And everybody always asks me like, Zach, how do we know when builders are going to raise their price? How do we know if like this sale is going to change tomorrow? And the short answer is we don't. Some builders move pricing based on the quarter. Some builders move pricing based on how much inventory they sold. Some it's like, hey, every 5 homes we raise our pricing. They all do it differently. There's no like exact science to figuring it out. And truthfully, most of the sales reps don't even know. They come into an email on Monday morning and it's like, hey, here's your new pricing, get to work. And you're like, oh, Okay, cool. Hey, here's your new incentives. Go get to work, figure it out. And it's like, oh, all right, cool. But builders, like, pricing is always going to move and increase the deeper into a neighborhood and the deeper into the development builders get. So if you're looking at something and you're like, hey, you're at the very front, that's probably a great opportunity because they're going to push pricing forward on that neighborhood. If you're at the end, they're trying to close out, they're going to try and get to whatever they can to get the pricing back to where it needs to be. So this is the thing I want to show you that I was probably the most giddy and excited about. And I got to figure out how to get there. So give me just a second. Okay, I figured it out. I got it there. So for a disclaimer, this is not me picking on this particular builder. You guys know, if you watch other stuff, I love selling Highland homes. I'm not picking on them specifically. So this is not just an indictment on them. This is just me showing what I'm about to show you that I found on the internet. I figured out how to use the Wayback Machine. And if you're not familiar with the Wayback Machine is it allows you to go back and look at websites that are archived, and you can see the changes and how those websites have moved from specific date and time stamps. This blew my mind. This is what I was most excited about in a good way and in a bad way. So here's what I want to show you. I'm on this page right here that we're looking at right now. This is the base level floor plans. So this is not quick move in inventory. This is like, hey, if you were going to go into this particular neighborhood and you were going to build a home, this is the base price of those floor plans before any structure, before any options, before any upgrades. And I want to focus on, I'm going to use one particular floor plan because it's one of my favorite floor plans, and I want to show you. So what I've got, you can see this here. This is like today's, like you can click on it and this is the website today looking at pricing. Well, then we're going to jump in the Wayback Machine and we're going to roll it back, and I'm going to roll it back twice. And I want to look at one particular floor plan, and I'm going to show you the dates and show you that floor plan and show you how the price has changed, because this is why I'm telling you, if you're willing to wait, you're probably going to lose money and it's going to cost you more, and you should not believe that lie. So this is today's price. I want to draw your attention to specifically the Canterbury plan. So this is this plan right here on the floor plans. It's 3 to 4 bedrooms. It's 3 baths. It's a 3-car tandem garage. It's a base square footage at 2775. It's being built on a 70-foot lot in this particular neighborhood, starting $609.90. Y'all can see that there, $609.90 starting price. So we're going to jump in the Wayback Machine and we're going to go way back once. And now I want you to notice the top of my screen. This is June 24th, 2024. So we jumped in the Wayback Machine, and June 24th, this is a snapshot of the same website, same neighborhood. Look at this floor plan. So we've moved 7-8 months on the calendar. Base price $579,990. Same exact floor plan. Let's go to the future, or go to the present. $600,990. Back in time. Open up a time portal. In June, this floor plan $579,990. I don't know if anything has changed in terms of standard features. I can't say yes or no. I can just tell you, what is that? Almost a, so we'll call it 780. We'll call it a $20,000 price increase in 8 months. So there's point one. Now let's jump in the machine and go back even further. So again, for reference, June 24th, 2024. Let's run it back one more time. And I got to scroll down. And so this one, we ran it back again another year. So June 3rd, 2023. Same floor plan, 532. So from June 2023 to the time of me shooting this video, which is February 2025, this same floor plan in the same neighborhood has jumped from a base price of $532,990 to a base price of $600,990. You can also kind of see, like, I wonder, so like right now, you can I see the incentive? No, I can't see it right there. I wonder if I can see it on this one. If we just go back and look, $20,000 to lower your rate. Right now, I know what they're doing. It's like a 5.49 fixed rate. So these will fluctuate a little bit too based on pricing. That's kind of what you'll see. I wonder if I can look here. Can I see it? Anything? $15K to buy down your rate. So look at that. It was even less, but pricing so look at that. Base pricing was even lower. And of course, if we want to look for fun, hey, here's some couple of plans that are, on completion, ready to go. $599, $639. Okay, so check this out. This is interesting. In June of 2023, base price for that plan that we've been looking at, the Canterbury, $532,990. They had one that you could have bought right here at 1935 Frediano. It would have been done in August. You would have spent $618,974 to get that house. Now we come back to the present and we see they have one of those. They sure do. May of 2025, you would spend $697,586 to get that house. Now, in this specific neighborhood, it's a new section of lots. That's part of it. So what you need to see is builders are always going to be incrementally increasing their prices. By how much? I don't know. I just showed you $20,000 in 6 months, and I showed you whatever that was, $70,000 over the course of 18 months. So you have to know if you're going to wait, that price is going to go up. And so builders kind of play this funny math sequence of like, raise the price, drop the incentives, lower the price, raise the incentives. It just teeter-totters back and forth, and all builders do this. So this is not me picking on Highland, not me picking on this specific neighborhood. All builders kind of do this ebb and flow kind of game. And if you're buying in that neighborhood, you want them, like if you're one of the people that's buying in these neighborhoods, you want them to keep raising their prices. It helps you. I know it doesn't make sense. It feels kind of counterintuitive, but you want those prices to keep going up, and they're just kind of up, and then they move those down, and then they move that down, and they move that up, and they move that down. It just goes both ways. They're still making their healthy margins. What those margins are, they're not going to tell you. People have asked me, like, hey, how much are you making on the house? The sales rep doesn't know. The builder doesn't know. It's like up in there. Their margins are fine. They're good. They're making money. I don't know what it is. I mean, I don't know exactly what those numbers are, but it's not for us to say, right? So that's kind of the difference of like, hey, if we look at that one neighborhood and just kind of see that timeline continue of how things have changed. Now, if we look at the pricing, so let me do this. Let me trade these things out on screen. I'm gonna put that over here so I can see it and put my calculator up there. So if I show you what's going on, like we can see how this would have made a difference on pricing, right? So hold on just a second. Okay, so now if I show you my screen again and we go right here, and we don't cheat on this, right? So I'm not going to cheat you guys. I'm just going to say, hey, here's kind of how this would work out, right? So if we put this here and we say, hey, that house, that Canterbury house today that we were looking at was $697,586. So if I give you guys, hey, $697, because this is where it really matters. And I'm just curious, $697,586. And we say we put a 5% down payment. We've already talked about today's rate is like 7.01, but I know what the incentivized rate is at 5.49. Let's just assume that's what that is. The tax rate in that neighborhood is 2%, and insurance is $1,800, give or take. We're estimating this is what this house would cost you right now. Rough math, at 5% down, 5.49, $5,400 a month, give or take. Now, if we jump back in the Wayback Machine, and that first one that I had was June of 24, and I look back and they had one, so they had one they didn't have one available. So I can't look at one that was available, but I can look at the one that we saw in August of 23, and it was $618. So let's do this. Let's change our base price, or our home price, from $697 to $618. 1, 2, 3. And then, because I don't want to cheat and I want to be fair, June of 2023. So let me look it up. What was the average interest rate in June of 2023? Here we go. Average rate was 6.95. So they probably had a little bit of incentive on that. So let's just round down, and we'll just say it was 6.8. So 6.8. See what it does. Comparative, moving price, moving incentive money. So you would have saved roughly $100 a month if you were doing it like that, right? So you kind of see how it, like, we move the price, we change the interest rate. This is where your payment starts to really fluctuate and change, right? So if we go back to that same price and we just say, hey, we're at $697, 1, 2, 3, we're getting that 5.49 rate, 5.49. And then on top of that, we're getting the 1.0 buy down for 4.49 on the first year. So 4.49, same thing. We're going to compute. Okay, so now see, that's where our math is really starting to move and make a difference. So if you think you want to wait, guys, I'm trying to adjust all of my things over here. I don't know that the math really makes sense when we think about waiting, right? Like, I could tell you story after story from clients right now that, you know, we've closed deals on, and we've gone and said, hey, market rate was 7 and we've gotten them down to a 5. I have a deal closing next week that's a VA buyer. Side note, I've said this before, if you're a VA buyer, you qualify for a VA, look at new construction. Look at new construction. Look at new construction. VA buyer, the builder is buying their rate down to like a 5.25 on an interest rate. That's massive amounts of savings. Are they going to be doing that in 6 months? I don't freaking know, but they're doing it right now. That 5.25 or whatever it is bought down is saving them from where they were starting almost $400 a month based on how they're structuring their deal. It's incredible. And that's not like a one-off story. We're doing it every single time somebody is like, oh, hey, builders have money. Let's go get it. Builders have money. Let's go get it. And you're like, Zach, I'm not even sure where we're supposed to be looking. I got you. We built you a brand new resource on our website. You can go check it out. You can browse. Forget the resale stuff. You don't want to look at it. It's hot garbage. You want new. I've got it set up. You can browse by city, and you can browse all the new construction in that city. So there's a QR code probably right there above my shoulder. If you're on a computer screen, click with your phone. If you're not on a computer, after the video is over, don't do it in the middle of the video. Click the link down in the description. Let's find you that new home, and let's find the most of the money. So you just have to ask yourself at the end of the day, are you willing to miss out on the potential savings? Are you willing to miss out on the upgrades? Are you willing to do less on your home because it's going to cost more? Are you willing to miss the corner lot because you weren't one of the first people to buy in that neighborhood? And if the answer is yes, then great. Let's wait. If the answer is no, then we need to start moving, right? Especially if you're thinking you want to be in before the next school year, or you want to be in, right now. Again, I think inventory is still the way to go in most circumstances. There's a few circumstances where it's like, yeah, let's build, but builder inventory is the way to go. So I would say don't let the misinformation keep you on the sidelines. The last thing I need to show you is we got to talk about the stats, because I wouldn't be anything good for you guys if I didn't show you the stats. So here's what I'm gonna do. I'm gonna pull up my stat screen. I'm gonna show you month supply of inventory, where we're sitting at in DFW based on a couple of big counties. And we're just gonna look at pricing and see what it's kind of done year over year. Gotta pause, gotta fix my screen, and then we can jump back in. Okay, I've set up my screen. I've broken it down based on major counties. So for reference, let me make sure I got my notes right. The blue line is Collin County, which is kind of to the north of DFW. The red line is Rockwall County, and it's kind of on the east side, and it's a little bit of a smaller county. But the reason I love it is it's got some of the lowest property tax rates in anywhere in North Texas. Ellis County, similar to Rockwall County, but it's kind of down south. So think like Waxahachie area. And then Kaufman County is one of the fastest growing places in the nation, like Forney, Crandall, all of that out there, right? So we're kind of looking at some numbers. So we're gonna look at a couple different things, and this is what I want to show you. Number one, so we're on the month supply chart. So this is saying, hey, here's how many, like on just specifically new construction. Actually, yeah, let's do this. Boom, just to make sure I'm right. We'll reset it. So just new construction, we have this many months supply. So if everything's sold, this is where it would go. Ideally in a neutral market, when a market is not necessarily a buyer's market, not necessarily a seller's market, we want to be right around that 6 month supply window. So this time last year, we were at, so January, February, 3.1, 3.5, 4.6, and 4.0. Now I want you to see we're kind of taking a slow uptick a little bit. So based on 2025, January, 3.8, 5.7, 5.4, and 3.8. So we're getting more inventory on the market. So builders are having more things that they can sell, which it kind of goes back to the statement from the beginning of them saying, hey, we're preparing for a massive influx of buyers. They are putting inventory on the ground like crazy. So we've got that happening. Let's see, let's just take a look. Let's just look at sale price, median sale price in these counties. So again, back to January 2024. So 461 median sale price in Collin County, Rockwall County at 350, Ellis at 421, and Kaufman at 329. These are median prices comparative to where we are now, 425, 430, 437, 350, and then of course our average sale prices are probably a little bit higher. Definitely Rockwall County, you're not gonna see a lot in there. Collin County gets a little bit skewed because Collin County has everything from like the Princetons and Farmersvilles that are like we can do in the mid 300s to the Frisco, Prospers, Salinas that you're not going to touch for less than, like Prosper, you're not touching for less than 8, I would think at this point. Let's just look out of curiosity. Let's just take Kaufman County off and let's just go Prosper actually and see what it is. Yeah, Prosper average sale price 905. So in the new construction space, if you want Prosper, we're probably going to spend $1 million. just to give you that. So don't ask me about Prosper and be like, we only got about 500 on a budget, because it is not going to happen. So that's our sales price. We've looked at month supply, number of homes for sale. This is on an upward trend as well. Again, based on the month supply, it should be on an upward trend. We're seeing Collin County is going to have some of the most massive growth, which makes sense given its location and its proximity. And of course, I want to look at closed sales on the new construction side just to see, again, kind of what's moving. We can take a little bit of a dip, which we normally do kind of at the first part of the year relative. So not bad, not bad. Things are still moving. So please don't buy those lies that it would be best to wait. I don't think it is. Maybe, and if you believe it is, I'm fine with that. Like, my goal is to help you whenever you're ready. So you can do it. Don't let the misinformation keep you on the sidelines. Don't let the fear of missing out. Like, if you want to make it happen, we can make it happen. And here's the thing. Right now, I said it earlier, we're at the peak. We are at the peak of builder money, and they want to give it away. So we should be the responsible party to take it, because if you don't, somebody else will. So if you want the money, let's go get to work. Let's find your house, and I will see you guys in our next video. Bye.